Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 7th of May, 2021. Hope you had a good week in the markets. The markets certainly did. NASDAQ was the exception there, as well as the biotechs, which were both down. The energy really was the leader, up 8.5%, and that's, if you recall, last Friday, the sector that I was most focused on and excited about for the coming week. So hopefully you got some action in that group. Let's take a look at the charts and make some sense of it. S&P 500 cannot close below that advancing 20-day moving average, and when it does that, the buyers continue to come in and today pushed it to a new all-time high. Just amazing the strength of this market. I was getting a little bit cautious in here because we were stuck below the 5-day moving average, and I was thinking we might do something like this, which is to come down to the volume weighted average price from the late March low. That obviously didn't happen, and that's why I don't sell short when I look for these setups. I look at them and say, you know, we're looking for a pullback within a primary uptrend, but not something to sell short because, again, the primary trend is higher, and when you fight the primary trend, you often get what you deserve, and that is to lose your money for being stupid, trying to be smarter than the rest of the market. The NASDAQ, still a little bit more cautious on the NASDAQ overall. As we saw, there was a lot of damage done in individual stocks. A lot of the growth stocks have really been banged up, but you've got to be impressed that the NASDAQ is still just a couple percentage points off of all-time highs. This has been the key level we've been focused on for the last month or so, as it was this prior band of resistance turned support. We're going to see if it continues to offer any resistance next week. The 20-day moving average is overhead. The 50-day is still advancing. So, you know, maybe we just continue to correct a little bit further through time rather than a steeper price pullback, and that wouldn't be a bad thing. This week, the volume weighted average price from this late March low is where the buyers did end up being, you know, showing that they were still interested in the market. Excuse me, we're also back above that 5-day moving average, which is declining, but you've got to be impressed with the resilience. It's just, it's not a market to be selling short and holding for any period of time. There are opportunistic short trades once in a while, but you know, the Russell 2000 continues to be stuck in a bigger range. It is holding the year-to-date volume-weighted average price. That's the thick blue line. The thinner blue line, of course, is the 20-day moving average. You can see the labels up in here if you're ever confused about what you're looking at. 20-day moving average. This green one is the 50, and this one down here, the 200-day moving average. So, you know, we've had a huge run in these markets in the Russell 2000. Nothing wrong with building some energy for the next move that will just make it that much more powerful. Semiconductors, I pointed out that we had closed 3 days in a row on Wednesday below that 50-day moving average, and the 50-day moving average is declining. The last time we saw the 50-day moving average declining was back in February and March of 2020, and obviously that led to this deeper sell-off. I think, though, that, you know, here, this line right here, this vertical line, is where we were 51 days ago. So if you look at the next 4 days, we're going to replace this data, and then by next Friday, we're going to be replacing this data in the 50-day moving average calculation. That will get it back in the upward trend. So I think that, you know, the Russell, the semiconductors, we want to be cautious. That's the move. I don't think we're looking for a decline like this the last time we closed below the 50-day moving average. I don't want to look at this as a bearish event. I want to look at it instead as, here's what we see. We have, this market has recovered back above the 50-day moving average, and, you know, after a big run, it's allowed to digest the gains for a while. I would only be concerned if we undercut the lows that we saw on Tuesday of this week. If we undercut those lows, then perhaps we see a stronger leg lower that perhaps even goes down to the 200-day moving average. But for right now, I'm cautious on the semiconductors. It just means you can't buy the dip and expect new highs every day, and that's, you know, that's a good thing. The biotechs, though, they did bounce right at the 200-day moving average once again. So let's just clear these lines off and show that here with a little bit more clarity. Here's the 200-day moving average. We came down hard to it. I think I had mentioned that I certainly wouldn't be shorting down here, that you don't want to short after it drops from 160 to 147. If you're looking for a short, and if the market then confirms it, you would want to see it bounce up towards that 50-day moving average and then short it back on the way down with a protective stop somewhere up in here. That's not a prediction, that's a potential scenario. Let's back it up to the weekly time frame, and you can see that, this is not only the 200-day moving average, but it's also a prior important level of resistance, and resistance broken tends to act as support. So it's tough to be bearish, especially with everything else making new all-time highs. That's a potential scenario, just to keep that idea in the back of your mind. It's not a trade plan. I'm not looking to sell short up there, and I don't want to sell short on a bounce. I want to sell short after a bounce begins to fail on shorter term time frames. The financials, all-time highs, I think 4 days or 3 days in a row here, 4 days in a row. So they continue to be obviously the strongest group after that major breakout of that 300 level, and there's just no reason to try to fight those trends. Energy, again, this one was the big winner, up 8% this week. Last week, I had said this is the group I'm looking for the strength to be in, simply because it broke above the volume-weighted average price from that peak and then held above it last week. It was also above the 20 and 50-day moving average and provided a low-risk, high probability entry to the long side, and that's exactly what we got. Hopefully you participated in that and had a good week. I will talk to you again next week. Thanks for tuning in.